Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So we are seeing some red arrows, with Asia being the standout as the Shanghai is down about 1.8% as China failed to provide any concrete details about economic reform. So, Scott, what would you say the key level is that the FXI needs to hold?
You know, China's been a spot since the summer, a sign of strength. The FXI has been on the move, and then a lot of focus was on that big event, and there was really no concrete details, so you saw a sell-off overnight. Now, if you look at the chart here of the FXI, you'll see we are at a crucial, support spot. This was the double bottom over the summer. Here's your higher low, higher low, higher low. Broke the downtrend, and since then, it's been in a corrective phase, getting very tight with a series of lower highs. You have your high, lower high, lower high, lower high, and here's where your support is. I would say most intermediate guys, if they're still involved here, they would get very disappointed if we close below 36. And then at some point, it's going to need to take out this downtrend and make a higher high in order to get back on track. But for right now, it's still grinding lower. And the markets and the world's trying to figure out what levels can hold after massive moves like we've seen for the majority of the year.
Yes, our futures, for example, point to a lower open as markets still seem to be figuring out the level of commitment to last Friday's jobs-fueled gains.
Yeah, last week was a tough one. Last week it looked like things were getting weaker. Thursday engulfed the entire week, getting most people out of their risk. And then Friday, we snapped back as it was like, okay, risk back on. So a lot of guys kind of flat-footed. And then if you're trying to see if you could get long again and trust the market, now all of a sudden we're starting to give back a little bit more than you wanted to in that Friday. So here's the chart, and here's what we're looking at. You look at the trend. If you're trading this macro trend since November, you haven't really lost much sleep. We tested it right around here, and then this is the most recent. So you want to look where we are right now. Okay, right now, this was the volatility of last week, and sometimes volatility is tough volatility, and I think this was. So with that being said, you have yesterday's low around 1760. If we were to break and close below 1760-ish, I would think that all of a sudden, the bottom end of this range comes into play, and if you were trying to be neutral to positive, we break below it, you got to get neutral again and look for two-way trades, which most guys are doing. But ultimately, I don't think you get short on the brain unless all of a sudden we start taking out the 21-day and this lower pivot. So right now, it's just a noisy area that's very thin and not the easiest environment to navigate.
Well, we know you believe in higher rates. Now, what do you think of Dennis Gartman's comments? He came out the other day calling a massive top in the bond market. So he must believe that rates are going higher as well.
It would have been nice if he said that 6 months ago. That probably would have helped, some people versus now when it's almost in motion and the TBTs have already had a big move and the TLTs a big down move. But anyway, I still think he's right. It's just a matter of, when you can get involved in this trade. And if you look here at the TBTs, you will see that, I guess, a way to hedge versus that is to be long this, because if, bonds are going to get crushed, that means rates are going higher, and that means, this will take out this high here at some point in 2014, which I do believe. So, this gap is still intact and it's still holding higher. So I think, you could be long the TBTs, and at some point this does get taken out. And as far as the TLTs, if you'd rather be short something and with decays, it would have been nice if he said this in April, instead of saying it when the TLTs are at the lows, So right now I think he's looking for follow through to the downside, which I do think you're going to get at some point. So below 102-ish, you can get that extended move sub 100.
Well, as we look for things to do in the market, we're going to turn the spotlight on high beta tech and talk Apple first. If you remember yesterday, we talked about how the stock was hanging in there, but since then it still hasn't seemed to have picked a direction.
No, and I think traders are watching. I continue to watch it, and you can make some money there each day. But if you ever add to it when it looks like it's going to go, it's hurt. So with that being said, let's just go right to the chart. Everyone knows new products are coming out. It's going to be an Apple Christmas, blah blah blah. But can it? Look at the move from 2 quarters ago to where it is now, and it's been digesting above this upper area. So if you're looking at Apple short term, which a lot of people do and a lot of traders do for opportunity, let me try and get you that close-up look here. You will see that here's the upper range, and that's what needs to be navigated. If you're in it, for a move back to highs, this could be your stop. Just don't overtrade it. Use 512 as a stop. If you're looking on a smaller time frame, then maybe you could even use yesterday's low of 517 if you don't want to stick around. But in order for this to really get better and start getting momentum, it's got to clear this with authority. It tried yesterday and couldn't. It's got to get above this 525 with heavy volume. Okay, it hasn't happened yet.
And Google closed around the flat line yesterday, but failed to reclaim the 8-day. So would you consider this a tricky spot that it's in right now?
It's getting tighter. You know, it didn't get into its earnings gap like some of the other stocks that did, so it's acting stronger. So you look here, if any stock's in the game to make another move, if the market wants to, this is in the game. You know, if you could use as a support 1,005, which was yesterday's support, it did go green in a sea of red. You know, so it's got to take out, again, this one's 1,017. You know, for some type of momentum, but who knows? So, you know, trade versus 1,007. If that gives way, here's your 21-day. If the market regroups today, this is something that could be on your radar.
And LinkedIn has been grinding lower, but this doesn't seem to be as much of a shortable one at this point. Is that right?
Well, when you go down 50 points in LinkedIn, it's always hard to short and press, you know, especially when we're getting closer to the 200-day. This has been a big winner for the past year and a half, and winners do correct, and they go through downtimes. And if you look here on earnings, this one gave way right there. So hopefully you didn't take it long into earnings, because we don't do that in most situations. But if you've been holding it since sub 100, you know, hopefully you use some kind of tier system. But anyway, since then, you had a bear flag, you know, for continuation down, and now it's starting to dribble lower. Let's put the 200-day in, which it's not in there. I don't know why. I had it in there last night, you know, to see where that is. You know, big-time strong stocks typically try and hold the 200-day the first time they get there, and the 200-day is at 198. So if we see extreme market weakness and we don't hold 1760, this thing could be seen at 198. And if you sold it up here, you know, it could be worth at least a trade down by the 200-day.
Now, what do you think about Facebook? Because that's been in corrective mode as well.
Yeah, we started talking about the weakness in this after the volatility of earnings, and I think we've been leaning more short than long. I'm actually flatted today, but overall, yesterday, if you look at the chart, it came back up after building this head and shoulders top and retested this 47.30. It was actually a little bit of a bounce play yesterday and failed there. Sellers still you know, got in the way of these moving averages and resistance, and overall, it does seem as if it could correct down to this lower support. This lower support comes in right around 42-ish. Okay, you have a point of reference here also at 45.26. So I would not be looking to take a big bet long in Facebook. You know, and at this point, you know, it has moved lower. So if you made some money short, just, you know, you stay with it and use 47.30 as your stop, and maybe you make some more money down to this area.
Amazon's been having a little bit of trouble as well. Closed on lows yesterday. Are you expecting some downside follow through today?
Well, Amazon and Google were the ones that had the good earnings reports that gapped up and been consolidating. Amazon, because I guess of the high valuation and the lack of earnings, it went into its earnings gap first. So this one I do think is weaker than Google. You know, this was that area that it kind of broke below, where you could have even used this. Okay, when it, you know, showed you this small little outside candle here. Then you had the downside and just bounced up and retested. So I just think this isn't, you know, stay out of the way here. You could make a little short-term money on it, but overall, for it to go up, it's going to need time, and for it to break this area, it's going to need extreme weakness. So at this point, just don't trade it, or you know, use 5 to 15-minute charts.
And Tesla, we saw Elon Musk come out yesterday calling all the headlines about that fire very misleading. He says he's confident in the overall vision of the company. There won't be a recall. So all this confidence, could that help a stock that's been correcting?
Well, it should try, and then we'll understand the real complexion of Tesla after today, because, you know, we've already corrected from 195 down to, you know, sub 140. It's trying to bounce here. Yesterday there was rumors everywhere that it was going to do a massive recall, which who knows where they came from. Someone should look for those guys. Anyway, with that being said, you look at the chart. The composure always changes on these high flyers, and it started to change right here when the market made new highs, and it didn't. That was your first signal to sell some Tesla if you've been riding it. You know, then if you don't take stock into earnings, which I don't, or I tend not to, you know, you saved yourself another, 40 points to the downside. So if you're looking for opportunities now, here's your lower pivot. Okay, it's up a few dollars this morning. If it could hold its gap, potentially, maybe it squeezes further above 145, but then you still have massive resistance in front of it. It's not going to be the same Tesla you had for the past 7 months. You have to take trades out of the way, and if it goes negative today, okay, then I think it could, you know, then it's in a little bit of trouble, and it could start working its way down to, some people say it needs to hold the, you know, the 200-day, which it's right below. So with that said, measure the strength today in a sea of weakness to see if there's more opportunities for a little, you know, bounce back.
All right, well, coming up, we're going to turn our attention to the semis right after this quick commercial break. We'll be right back.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
We're back and going in the trenches with the semis. Let's start off with a look at the SMH.
Yeah, the SMH is an ETF if you want to just own a basket of all of them, and they were sort of strong yesterday. So you look here at the semis, if the market holds up, it's had a decent day yesterday, so I would be long perhaps versus this 40, but if the markets were to weaken, this too has a lower level support at 39. So watch the semis today. If they don't go green, I think technology is going to have a problem.
All right, well, diving into some individual names here, if you'd prefer to play actual names, how about TXN, which seems to be building a nice upper level base?
Yeah, well, I just showed you the SMHs that were below the 8 and 21, but you look at Texan, it's showing relative strength. If you're looking for relative strength, here you go. It's on the 8-day, broke out here. But these upper levels have been giving way. So I would say it's got to hold 41-ish in order to stay relevant. And if it can hold 41-ish and the market wants to go higher, this is the semi that probably will make new highs first.
What about Intel, though? Had a nice move up yesterday after it had been basing above its 21-day for a while there. Do you think we could see some more continuation today?
It's interesting. As high beta got a little weaker, mega cap tech got stronger. And if you look at Intel, it's somewhat in the game. It tried to poke its head above this range. It's above the 8 and 21, so it's showing relative strength. So with the futures down today, maybe look to see if we can go green. And if we can go green, then it's got to get above yesterday's high of 24.50.
And if some of those names go green, maybe we'll see AMAT follow suit. That one's been in a tight range as well.
Yeah, this one has my number. Every time it looked like it's going to get above 18, it hasn't. So at this point, maybe earnings that are out tomorrow could be the catalyst. You look at the chart. It's been one of the strongest semis this year. It's had a really nice move, and it's consolidating now for almost 3 months. So with that being said, the gap up here is still intact. Hard to take into earnings. Maybe you want to do some kind of option play. I'm sure the premiums aren't too horrible. They're at 18, or wait for the number to come out, and if they beat and they guide higher, perhaps you could be a buyer aftermarket at the 18s. But so at this point, it could help the group overall. So just see and wait and watch. And at this point, it does look a little stronger, but it's not ready to break out like a lot of things in the market right now that are iffy.
All right, let's switch gears and do some quick hits. Let's talk Pandora, able to reclaim the 8-day yesterday and close on highs. Maybe we'll get some continuation.
Yeah, strong stock, strong chart. I want to show you real quickly. Try and take the PE and valuation out of the way. This is trying to make new highs. If it goes green today, maybe get more cash flow above 28.36.
Las Vegas Sands triggered the buy price listed in Off the Charts newsletter on Monday. That price was 71, and then it closed above the 8-day yesterday, showing commitment there. So it looks pretty good.
Looks pretty good. It was upgraded today. A lot of people came out on the whole group, and this one was given a buy target up to 80. So you're going to see a red, see if there's some relative strength there because of the upgrade. If it can't go up today with the upgrade, then you'll know that it's just not ready yet.
And how about Procter & Gamble? It's been getting some support along the 8-day. Does this look interesting to you?
Yeah, let's look at the chart. You look at the chart, a lot of consumer staples continue to act well, and this is trying to break above this recent high. I know it tried here and couldn't really go, and then it held the 8-day. So I would say above this, what is this, 83-ish, you could get some type of trade for a stock like Procter & Gamble, not so bad.
All right, well, there's clearly things to do out there. What will you be focusing on to begin the trading session?
Well, I come in today with like 5 or 6 longs and a hedge, and the futures are down 6-7 handles, so I want to see what type of day we have. Do we open lower and then go green? Do we open lower and drift lower? Do I have to salvage some trades? Do I have to, manage some positions? So at this point, I think I'm in a lot of the right names, and if for some reason we start losing 1760 with some kind of authority, you'll probably see me have a lot less risk on, and I'll be a little frustrated, and I'll say, okay, let's wait and see what's next. There's a lot of frustration on the floor as people are trying to find things to do, and there have been some things to do, but nothing to really sink your teeth into. So if that's the case, I know most traders make the majority of their money in 3 months out of the year. So with that being said, the hard times are to not lose money when it's not those times. So half the battle is knowing what to trade or knowing when to trade. So if you're not feeling it right now and you got messed up last week, just take it easy, try and put some green days together, and don't overdo it.
All right, with that said, that's your morning call. Happy trading. Have a great day.